Hey everybody, PJ back with Watch Trading Academy, and today we are going to be talking about something very specific: how I got really rich trading timepieces. There was a specific strategy I used that I continuously see over and over people misunderstanding on the internet that I wanted to share with every one of you today, and I'm going to do that completely free on YouTube. Now, one of the things I want you to understand is that these strategies are not to be taken lightly because there's a lot more that goes into them. And again, do not forget, if you've never thought of investing in watches or don't understand why a Rolex is worth 3 times its MSRP, or literally an AP or a Patek or even a Richard Mille is worth 4 times their MSRP, you need to take my free training. It's in the description below, and you're going to be able to, of course, learn how to do this completely free. Now, in addition to that, I also want to point out to make sure you like, subscribe, and turn on notification if you enjoy this type of content. Now, I want to talk about the one specific thing I did that enabled me to get very rich in this game. Now, something that people just don't understand because they get their information from various channels here on YouTube. Different people do different things on YouTube, and therefore all of these watch traders have their own strategies, right? Oh, looks like that I'm writing all over the place, right? So anyways, some of the things that are happening in the watch world is that people aren't paying attention to the fact that everyone uses a different strategy. So what I've done to get really rich is I was able to decipher between the three, and that enabled me to maximize my profits per watch. And I want to show you exactly the 3 ways to play if you're starting or are a watch trader or investor. So I want to show you basically the 3 types of plays they are, and you'll notice a ton of people in the space on YouTube doing this first one, and that's called wholesaling. And again, forgive me if my handwriting is shit on this thing, but anyways. So wholesaling is basically when you buy a watch from a jeweler or someone that basically sells watches and end up selling it to a reseller or another jeweler. And the reason people usually wholesale a watch is the ease of it, right? It's like, hey, I walked into jeweler 1, I got a really good deal. I walked into jeweler 2, he needed the watch, he paid me some money more than that. Or my friend was selling a watch, I got it really cheap because he didn't know what to do, and I took it to a jeweler and they offered me something more. Now, the average wholesale deal makes anywhere from $500 to $1,000 if looked at in the most basic of ways. And what I mean by that is you buy a watch and within moments, meaning a day, a week or so, get rid of that watch. So the market has not really changed on that watch, but you just got a good margin and a quick, easy deal for you getting some money. This is the majority of secondhand, not like the big guys, but the small guys that are peddling watches between Miami, New York, etc., and don't really hold any real inventory. They're in the wholesaling business. They buy a watch, they sell it to another reseller, they have access to watches, and they keep moving these watches around for little margins. On very expensive watches, they could go as high as like $5,000 or $6,000, but the point of wholesaling is the ease and the speed of the transaction. Then comes what I call the second strategy, which is called the trading strategy. Now, I like trading because this is basically when you buy a watch from a wholesaler, except you don't resell it back to another wholesaler or reseller. Instead, you send it to what we call a retail client. Now, a retail client is someone that basically ends up wearing the watch. So you could be asking yourself, well, where do I find these people? These people that you would advertise the watch online, and the person buying it would basically be buying it for personal use. The reason you want to do this in the trading arena is because you get more money. Obviously, when individuals, like normal people, see watches for sale, they look at the pricing on Chrono24, eBay, etc., and they make a decision to buy something. They don't understand how this industry works, so they typically basically want a good deal off the listing price. And since jewelers are amazing people at making a ton of money, what they're doing is they're basically jacking up the listing prices. So if a watch is listed, for example, for $280K, it's very likely a jeweler only paid $230 for that watch, but is listing in an attempt to make a good 20%. Now, a retail buyer might feel like they're getting an incredible deal at $270, saving $10K off the list, but really are still paying a hefty, very hefty profit to the person selling the watch. So trading is really the second and very important piece of the equation, and really the focus point of why most people never make it in this industry, because they focus heavily on wholesaling and the ease and access of the quick money. Now, people often wholesale too because they have limited capital. Remember, with trading, you have to wait for a retail client to come by advertising a watch and trying to sell it. This could take a much longer time than this, and people think that the rotation of watches is typically something they want to be doing fairly fast because they're limited capital, so they stick to wholesaling. The issue, though, between the two types of trading that people aren't paying attention to is with wholesaling, you are obviously taking a lot of transaction risk, like high dollar wires, etc., and are feeling safer because you're dealing with individuals within the industry, right? And then with trading, you're dealing with new individuals, so it might take a little bit more conversation or more discussion to get to a place where you feel comfortable accepting money, etc. But again, the payoff is higher, right? And then the third and very important aspect that a lot of people aren't looking at that jewelers also partake in, big jewelers, not the small ones, not the guys that can't afford it, is investing in watches. And there's a significant difference here because you're buying a watch, except you're not intending to trade it or wholesale it anytime then. You see, historically, watches have always gone up in value, and they've gone up over the last 30 years and done very well. If you look at Daytona pricing 30 years ago, it was like a new Daytona was like 10 grand. Now it's 15 at the store, but you also have to consider that the market value of a Daytona today could be as high as $190,000 or $150,000, depending on which one you're looking at. So you're talking about, let's use a John Mayer dial. This is a $32K investment as an example, and its current worth is $130K. Now, its current worth in the market today is $130K, and there are still opportunities to buy this watch in the 30s, right? So one of the things I want you to understand here that matters a lot is that while the watch might be in the 30s, let's say it's even 38, 40, whatever, it doesn't make a difference. The market value is $130K. So there's $100,000 in profit here instantly. The reason this is very expensive is it's hard to get. So there's a couple of ways you could think about it. At some point, this John Mayer dial was not that hard to get. Right now, it's the focus of everybody because the value is here. At the time, it wasn't hard to get. The value was just $50K. However, it was much easier to walk in a store and get it. Let's say you would have bought this a year ago, and today, you could easily literally wholesale it here for $100K more, right? Which is pretty impressive. So your ROI would be almost 300% on your money just on the basis of holding something 1 year. Now, there's no other investment that I would say would earn you 300% without capital gains tax or anything else associated with it, and the ease of transaction, not even having a receipt. This is the power of this industry once you actually learn how to exactly use it. So the point I'm making here is that if you knew that this particular watch was going up, you could have secured it at the time when it wasn't as popular. And literally today wholesaled it as easy to a dealer, but not just for making $500 to $1,000, but rather for making $130,000. Now, this is a pretty big deal because to say that a watch is worth $130,000 might sound like a lucky draw. You might think to yourself, well, you have to be lucky. You have to know exactly what this watch is that's going to go up. But what if I told you that every single Rolex, Patek, AP, and so on and so forth, for the majority, like probably 90% of those units are going up today? You might say, well, that's a pretty broad and good gamble. It's like if you knew you were playing roulette, but 90% of the table was a winning bet, you'd be winning a lot, right? And that's why watch trading is such a powerful thing. You see, I realized something, this one key thing that a lot of people aren't talking about in the watch trading space, and I'm going to tell you what this is because, again, this is like kind of a secret that jewelers have been having for years. And this is something that, again, no one's talking about because they don't want their secrets exposed. You see, jewelers have a vault. Well, you already knew that because they're obviously putting watches in it. But they have something greater than just a vault to put watches in. They have a vault where they forget watches. Now, this is the one secret that no one's talking about. In this vault, they are buying these watches, not just the John Mayer green dials, but watches that they believe will be very high demand, highly discontinued, or watches that will be going up significantly in the next year or two. And they're buying these watches, let's say at 38 to 40 to 50, all the way to this number, and then these watches are going in these vaults and they are no longer for sale. Now, you ever think about why that would be the case? Why would a jeweler not want to make 38 to 50K, which is a very significant 20, 30% return in one day? Why would they want to go ahead and literally put a watch away in hopes down the road maybe they'll be making more money? And the answer is there isn't enough places to park money. Now, one thing I want you to understand in the watch game that people don't understand about why watch trading and watch wholesaling and watch investing is such a great and incredible way to earn money is because, you see, when you buy a watch, conventional thinking will let you think that you are purchasing and losing money on that watch. A typical consumer would say, I don't want to spend $500 on this watch. Okay, or I don't want to spend $50,000 on this watch. A consumer feels this way because they feel like that money is gone, right? This money is leaving once you pay for it. Now, this is the part that people don't understand about watches, and I want to kind of explain this to you so you can kind of see it here, and I don't want you to get confused, right? So, all right. So here's the thing with watches. Let's say you buy, for example, and I left this wholesaling thing up here on purpose. Let's say you buy a watch used for $52,000. Now, you might think to yourself, wow, it takes a lot of balls to buy a $52,000 watch, and that's not the case. This is almost a $200,000 watch now. So, but I didn't pay $200,000 for it. But let's think here for a second and look at this $52,000. Now, let's say this is a Patek that you happen to have bought at the store. You walked in a different country in America, whatever, and you got a Patek. Now, right now, I know this is very difficult, so if you're watching this and like, oh, good luck getting a Patek at the store, that's not what I'm saying here. Don't be an ass clown. Just understand that this is basically the value we're assigning to a Patek for the sake of this demonstration. So let's say this was your $52,000 Patek. Now, what you need to understand is that you're not actually spending $52,000 today at Patek. You're parking it. And I'm going to tell you why this matters, because this is something you have to understand. There's two types of Pateks. There is what you call the wanted Pateks and the unwanted Pateks. Now, the wanted Pateks, so we're going to do it this way. The wanted ones, the day they're at 52, they're worth like 200, right? Because they're really wanted. They're usually on a 4x multiple right now. The unwanted Pateks are basically 30% off. And I'm going to show you how this example works with both times. So 30% off of that is 15,000. 15,000 off of 50 is basically 35,000. So this is what you have to understand. In this case, 35,000 of it is basically the worth of this watch if it's unwanted, and about $200,000, right, which is 400% up, is the worth of this particular watch if it's wanted. But what I want you to understand is in either case, spending $52,000 in the case of the better watch means that you technically have spent zero. Meaning this watch will never lose its value to its MSRP. It will always be worth more. You have made an investment and can choose when to exit that investment. Imagine if you bought Tesla at, for example, $600 and you knew that it would never move, like never, ever, ever go down. Would you not take that investment? This is why watches are incredible. Now, let's assume, however, you made a bad bet. You bought the wrong stock, right? You bought the IBM stock and it wasn't that popular a quarter and it dropped. The problem with that stock is that it keeps dropping or keeps being volatile up and down. What changes, though, in the watch market is that once that initial drops occur, that is now safe money. It's what we call wholesale money. So wholesale money basically means that 35,000 of your 52 will always be safe because you could literally take that watch to a jeweler and collect 35,000. So if you know that 35,000 is always in the watch and parked, then you didn't spend it, you simply allocate it there. Now imagine if you had a savings account where you just put 35 grand of your money and you said, look, I'm putting 35 grand and that's never going to go anywhere. I just can't use it immediately because I can't withdraw from it because I'm wearing it on my wrist. However, I could walk into a bank, which is not a bank, but a jewelry store, hand over this watch and literally for 35 grand back in my pocket. Now, here's what I want you to understand. You would say, why would you want to do that and lose $15,000? Well, this is assuming that you're buying this new, right? But if it's undesirable, you're going to buy it used at this dollar. So literally, you got to wear a watch for free. Now, over time, this is going to go up anyways. And it's going to go up for one reason, because this is the MSRP of a watch. What happens with Patek, Rolex, AP? Pricing keeps going up. Each and every year, price increases. If you look it up over the last decade, we've had almost 30, 40, 50% price increases. So now, let's say in this last year alone, you had a 10% increase, right? In this MSRP. That means this watch is no longer 52, it is now 57. Well, what that means is this number is now 38. So you just made $3,000 by holding an unwanted asset. And if you bought it right, you bought it at 35, then you just made 3 grand. Now, let's say you bought it wrong and you get paid 52. You just got 3 grand closer to your investment. Now, at some point, the really wanted item, which is right here, right? That was 400%, is going to be 300K, which means it's going to be 5 to 600%. And which also means because of that, this item will no longer be discounted at 30%, but rather 20%, except off the new price. I don't know if you're still following me, but hopefully you are. If you are, then you're understanding that now you're going to be at 47K at the worst case, and then later at 10% and so on and so forth. So automatically, your 38K just went up right here to 47. You just made another 9K just because you bought pre-price increase. And literally the price increase took place, it went up and it became rarer, so everything worked itself out. So this is showing you how basically you can keep making a margin of 10%, 8%, 12% each year on an unwanted item and 100 to 200% more on wanted items without ever going to the bank, but going to a jeweler instead. And so again, understanding this was the key that enabled me to play the market really well over the last 6 to 7 years consistently, because previous to that I was just trading watches as a hobby and was making good money, but wasn't taking it as seriously as I should have. But this is what all of my students are being taught at Watch Trading Academy. I just gave you a preview and taste of it completely free on YouTube. So again, if you like this type of content, please like, turn on notifications, of course, subscribe. Let me know your thoughts on this strategy, if you're going to utilize this or not. And more importantly, click the link in the description and learn how anybody can start becoming a watch trader with as little as $1,000, access to a post office, and a computer. Anywhere globally, you could be doing this if you get good at it. It can pay off big time. And one of the things I want you to understand more than anything else is that watches are assets. And once you understand how they're used by the ultra-rich to park money, you start to realize why you needed to be doing this 10 years ago, 5 years ago, last week, or whenever. But today is the last day to get started, because if you don't start doing it, you're going to miss out on significant profit. So don't miss it. Click the link, and more importantly, leave me your comments, and I'll catch you on the next video for Watch Trading Academy.